Welcome to Mining Over Canada. Join the Canadian Securities Exchange and our partners in a first-hand look into our country's vast mining landscape.
Hi, my name's Serin. I'm Director of Listings Development with the Canadian Securities Exchange. I am joined today by Mr. Frank Holmes. He is CEO and Chief Investment Officer with U.S. Global Funds. Thank you so much for joining me, Frank.
It's great to be with you, Anna.
You are joining us as part of the CSE special platform that we've created, Mining Over Canada. And we're going to talk a lot about mining today. Most people, if they know much about the mining space, probably know your name. You are normally with us at wonderful events that are across the country and on the other side of the border. Unfortunately, this year, due to our current state, we're all doing this from home. So thank you very much for bringing your insights to us and as part of the Mining Over Canada platform.
Anything that helps educate investors, I'm there to help and be part of that process.
Well, and I think that's the reason that we're having all of these discussions is we have these amazing experts out there, such as yourself and many others that we've interviewed throughout this platform. And each and every one of you have all said that you're willing to provide your expertise and your advice at any time. I was quite surprised how open everyone is to being available for people as they go through these muddy waters of investing in the mining space. So why don't we start off, tell everyone about yourself and your path, because you've had quite an interesting path.
Well, thank you, Anna. I'm a Texcan. I'm originally from Canada. I've been living in Texas for 30 years. So I say, y'all come back, A. And I grew up in downtown Toronto, in Cabbagetown as a kid. Went to Western University, Huron College. Was the college that was actually founded at the University of Western Ontario. If you like history, Trinity College or University now founded University of Toronto. And so was my journey. I went in the investment world. I was so fortunate. I got hired by majors, but I joined a boutique investment company that had such a presence in mining and also commodities, Merit Investment Corporation. And that was just a wonderful journey for me, being hired originally as a research analyst and then built a trading desk to cater to all the gold funds in America, then corporate finance. From there, I took my knowledge as a research analyst, understanding trading, and then went into corporate finance. And I was so blessed to meet the Pierre Lassondes and the Seymour Schuligs very early in my life, and particularly Ned Goodman. They were all different and wonderful mentors. And the first deal I ever worked on taking public was Franco-Nevada. And what a journey and a ride that's been.
Well, you bring up Ned Goodman, and he obviously means a lot to us at the CSE. He was an investor at a very crucial moment for us and really helped us kind of launch into what we've become today. Very smart, wonderful man. So he means a lot to us as well. Tell us about Nevada.
Franco-Nevada.
Sorry. Tell us about Franco-Nevada.
Franco-Nevada was a company that first started out with a big project, the Lava Cap property, and it morphed, and it's interesting to see creativity of the Seymour Schulig saying that he made a lot of money. He was an expert in buying oil and gas royalties. And the young engineer, mining analyst, Pierre Lassonde, had joined him. He said, we've got to go buy gold royalties. This is a nice business, high margins, etc. So Pierre went out and Pierre bought the first royalty, and that was the creation of the spectacular growth in Franco-Nevada. It outperformed Berkshire Hathaway all through the 90s, and then it got taken out by Newmont, merged, and then it resurfaced in 2008. And since 2008, it's crushed the performance of Warren Buffett's Berkshire Hathaway. It's now the largest gold royalty company in the world. And during this whole journey back in 2003, there was no other royalty company, so except for Royal Gold in Denver. So the creation with Frank Justra and a couple other in Telfer was the creation of Silver Wheaton, which became Wheaton Precious, which is the second largest royalty mining company. And I love royalty companies because they're just like a technology stock. They have high gross margins. They have recurring revenue. The revenue per employee is over $20 million. Goldman Sachs is $1 million. I'd rather own a royalty business. It's highly efficient. So that has been an exciting part of my journey in the mining space.
So you bring up something that actually I don't think has come up in any of our interviews yet. So I want to touch on it. Can you explain to our audience what a royalty company is?
A royalty company is a company that funds a development or a project or expansion of production or buys existing production, and it believes that there's going to be a further growth. And so they give the capital and they get a royalty or a stream of revenue off the top of the production. So every ounce of gold, they're going to get $5 for simplicity. And if they find more gold, it's free to them. If there's more gold produced every quarter, it's free to them. So they look to get back their money over a 10-year period. And so often these royalties end up being 30 years. So they're huge paybacks.
Wow. It's a great investment opportunity if people are looking at different ways that they can invest. It's fairly unique, isn't it, to the mining sector?
It is, and it's interesting to see so many other companies have been able to, Alamos Gold, Yamana, have spun out these assets. They have royalties. They were getting no value on their balance sheet. So they spun them out into owning a piece of a royalty company that's public. And all of a sudden they get mark to market rules that allow them to get a valuation for 8 million becomes worth 40 million. So it's been a creative way for new mining companies, new adventure investing in this space, and it's helped the balance sheets of Alamos Gold and in particular Yamana.
Absolutely. Now, another form of investment opportunity in the mining sector, and this, of course, is across the board of all sectors, but you obviously have a huge amount of experience in it, is why don't we talk about the opportunity in ETFs as well? Because this is another way that people can invest in the mining sector. I think it provides a lot of value if they're building out a bit of a mining portfolio for themselves, and you have built them yourself. So tell us about that.
Well, I think the first thing to remember is a great newsletter writer, retired years ago, Bob Bishop, because he made a lot of money in the mining business, which is a great sign. He was early in diamond fields and he was early in other diamond projects. But Bob had this sort of theory that there's three price levels. There's wholesale, retail, and there's fairy tale. And you have and Tinkerbell dropping gold dust everywhere. You have to be able to differentiate what is the difference. What is cheap? What is expensive, and what is just fairy tale. And so with that, I always like to use that line to understand, and investors have to realize, and traders and speculators, when we look at junior mining explorers, only 1 in 2,000 projects drilled will find 1 million ounces. That's speculation, that's gambling, that's okay. But what's happened in our regulatory world is that it's okay to buy a lottery ticket which has worse odds against you, or go to the racetrack, or go to a casino. But God forbid you buy a junior explorer. But really, you can do some homework, and the risks are a lot less there. If you buy a company, the classic would be like Seabridge. Seabridge bought from Newmont, I believe it was a package of low-grade, big deposits for $800,000, and then went to $1 billion in valuation. So here's a small micro cap is now $1 billion company, and you can see that value creation by having those ounces in the ground. And I think that's the real important part for anyone in this space is speculation when you go into a junior explorer. And you have to really understand macro forces, what's driving the price of gold. The world doesn't have to come to an end today. That's going to drive the price of gold higher. We have this experiment, and it's being pushed in Canada as it is in the US, of MMT, is the acronyms for modern monetary theory, and it's basically giving out money. COVID comes along, oh, here's everyone gets $1,000, everyone gets $2,000. Anyone that's poor, let's just give them free money, using monetary policies. And as you've seen this growth in this MMT for the past 20 years, it's no coincidence that gold as an asset class has outperformed the S&P by 3 times. 3 times. It's no coincidence that beautiful royalty companies like Franco-Nevada have outperformed the S&P 500, they've outperformed gold, and they've outperformed the Berkshire Hathaways. So I think that there's a real thesis here for gold. I think the same thesis of this money, this MMT, is going to continue to grow. I was told by one fund manager, Marin Catuzzo, was saying there's 60 countries now practicing it. In the G20, all of them are doing it. And it's basically currency devaluation. And real assets start to rise. So in the US now, we're seeing real estate's up between 10 and 15%. I'm told in downtown Toronto, real estate is up substantially also.
Same in Vancouver.
In Vancouver. And art, collector's pieces of Andy Warhol art, it's gone up more than 15%.
Wow.
And it's recognizing that real assets with this MMT as a huge, for some people, it's a headwind, it's a tailwind for gold investors. So now it's better to have a big portfolio, is probably be about 80% in producers that are undervalued and royalty companies that are undervalued on a relative basis, and then 20% in explorers, because that's where you're going to get your big bang for the dollar. And recognizing that when the 50-day moving average is above the 200-day moving average for gold, which is done now for 20 months, gold is in a secular bull market. And it does this for 3 to 5 year runs. When it goes to, they call it a death cross, when the 50-day goes below the 200-day, that's a bear market. You are now in a bull market. And you're still going to get this tremendous volatility in gold stocks. So let me help you with the math. The daily volatility of the S&P 500 is 1%. 70% of the time, it's a non-event for the S&P to go up 1%. Bullion is exactly the same. It's plus or minus 1%. But most of the talking heads would say bullion is too risky. It's not true. It's the same volatility. 2, it's outperformed the S&P 80% of the time for the past 20 years. And it's in total fixed investing, it's up 300 times more. So gold is an important asset class. Now, gold stocks, their daily volatility is plus or minus 3%. That's where the risk comes from. That's where the speculation. Junior mining is 5%. Junior mining is like biotechnology is the same. And so is Bitcoin. The daily volatility of Ethereum and Bitcoin is plus or 5%. It's a non-event. Once you recognize that, then that volatility of 5%, now you're speculating. And once you can understand that, then you can stomach the downdrafts, but recognize you're still in a secular bull market in gold. And if you're going to go into the speculation of junior mining, then you have to make a decision. Are you going to bet on the jockey or the horse? The horse is the asset. The jockey are they good riding that horse? And there's only a handful of real highly successful people that are able to repeat creating wealth in exploration. So it's trying to find who those people are. And Eric Sparta always says he likes to bet on the jockey. As you go down to explorers, he's going to bet on the jockey, not the horse.
And so the junior side is the opportunity for people to get in. Obviously, there's so much of it going on in Canada. I know there's a lot of exploration that's going on in the US as well. But can you just break down what an ETF is? Because I wanted to just make sure that we touched on that because you've had the opportunity to build a few. And I think that it's an important part of when people are looking at investing in the mining sector.
Well, a lot of millennials have come into these markets. Unprecedented. The dollar volume in the US is bigger than stock buybacks for the past 5 months. And what's to me is important, it's called price discovery. And Robinhood has allowed the small investor at no fees, no minimum amounts to speculate. They can give you a fraction of a share of Apple. They can give you a fraction of a share of Berkshire Hathaway. The fact that they can do that, all of a sudden you've seen TD Waterhouse and Schwab and other firms going to zero trading in the US. And this is only lending to all these people to speculate. It's much smarter for younger people to take these bigger risks because they can replenish their capital than someone that's retired. And that's why I've always said the 80-20 rule. You shouldn't have more than 20% speculating if you're going to go into the explorers. But then with that, when we take a look at what ETFs have done, is ETFs have allowed passive investing where you can have sectors and themes. You buy a basket of stocks, and it can be an index of all gold stocks like the GDX and GDXJ. But 30% of the assets in those two ETFs are the 3 times triple bull and bear. Most of the volume comes from the triple. So the speculation, there's incredible speculation in the triple bull and bear on the GDX and GDXJ. And it's for investors to realize that are you really investing or are you speculating?
Yeah.
And so if you're going to speculate, understand you shouldn't really speculate on these triple bulls and bears unless it's very short term. And the same thing when you go to junior mining, you have a longer term, but you want to make sure you're not getting the Hotel California trick where you can get in, but you can't get out. You can check in, but not check out. These liquidity issues are really important. What we've seen, unexpected, we have the only airlines ETF called Jets. And Jets halved in March with the meltdown that took place. Then all of a sudden, millennials started coming in buying it. Millennials with price discovery all of a sudden attracted bigger capital traders, bigger institutional hedge funds. And this particular ETF went from 35 million to almost 2 billion today. Our gold ETF called GoAU, Go Gold, is basically went from 20 million to $120 million. Now, both of these products are quant driven. That is, the portfolio structure recalibrates every quarter. It's a unique portfolio structure, and the stock picking are back tested for 10 years of data mining to make sure that we de-risk how we pick those stocks and recalibrate every quarter. But it's a quant approach, those ETFs. So what we wanted to make sure, and that's what's happened with ETF space, also buying an index of a names and a theme. The smart beta says you can look for the winning factors. So companies that do bad decisions, bad M&A work or dumb financings, they get kicked out every quarter. They all of a sudden destroy the reserves per share. They're gone. You do anything to impact your revenue per share, cash flow per share, reserves per share in our ETF, you're gone. We only want to high grade it. So we're seeing the ETF space evolve into smarter picking ETFs, and you can trade them all day long, by the minute, by the hour. And that's what the new speculators are coming in. They want to trade. No sports, by the way. Guess what's happened? Puts and calls have exploded. The speculators have said there's nothing to speculate in sports. They've gone into the capital markets. We're seeing that also showing up in junior mining. And so it's recognizing that you have more capital going into this space, looking for speculation. Now we want to make sure that there is full, true, plain, and timely disclosure. We want to make sure as a fund manager that we're trying to educate investors that there's some of these junior mining stocks are closeology or they're pump and dumpers. They really don't have a proven asset or an asset that has any merit to it, or the track record of the management are known for pump and dumpers. You've got to be able to weed those quickly. And it's interesting that these millennials predominantly use YouTube and podcasts. That's how they're educated. So what you're doing is a great product for millennials to become more informed before they speculate in this space.
Okay, you touched on something there that I want to elaborate on. And we talked about it a little bit in our pre-discussion. So just to explain to people, Robinhood is a online discount brokerage platform in the United States. And what they came out with was free trading. So there's no fees associated with trading. We have
fractional shares.
And fractional shares. Yes. And that's important as well. In Canada, we have these are called discount brokerage accounts. Most of the financial institutions have one. And the trading fees are non-material, I would say. Some of them I think are $9.99 per trade. So, not far off from zero when you're looking at kind of buying and selling. And I heard a quote somewhere, and this is not totally accurate because it's been a while since I looked it up. But the first quarter of the pandemic, so to speak, Robinhood saw an influx of 3 million accounts. That's not even an influx of capital. That's an influx of 3 million accounts were opened in that period of time. So retail investors went to the market and started buying and selling. It was something that I didn't quite expect to see. I'm not sure how you felt about that. One question I have for you is, looking at the mining space, it is incredibly technical. And I think that there's a due diligence process that needs to be implemented for every investor. Where should, investors used to go to their brokers. The brokers used to be the real salespeople, especially in the exploration space and the junior mining space. Now they're going to their discount brokerage account. How would someone pick a company? I mean, how do we bridge that gap between, the expertise of the mining sector and where to put your investable dollars, and the fact that you're doing it on this free platform where you can buy and sell all day long? What do you think the bridge needs to happen there?
Well, first of all, we have to look back at 50,000 feet. It's the unexpected consequences of good intentions. They're just really unexpected. That the regulatory world has basically pushed away the retail investor to come into the capital markets, anything that's speculative. They have basically said it's okay to buy lottery tickets, go to the racetrack, or go to the casino. But God forbid you buy a junior company. And I think there has to be, something has to address that. And so what you're seeing, the millennials, they're predominantly going to YouTube and podcasts or listening to interviews. One of the big parts we found from the Jets is that a lot of them have done research that in the last 3 big meltdowns in global economy, after the bottom took place, 6 to 12 months later, the airlines were up 80 to 120%. So all of a sudden they're speculating, if I can make 80% in 12 months, well, that's a big win. So you're seeing them do this research. And I haven't seen this since the 90s when everyone in America discovered retirement programs for their 401k, and they discovered mutual funds. And I had mutual funds. So fortunately, I've created these ETFs, and they're going to continue to grow as becoming a vehicle for this sort of speculation. And I think for investors right now, it's really tough. There's very few companies. I know that Jonathan Goodman is working with the mining companies to try to help them tell their story better, et cetera. There's Red Cloud that says that they take on clients not for investment banking. They have to pay them a retainer to write the research so that there's some story, educational information that's out there. I think conferences like Cambridge puts on every year in January in Vancouver is a major home run to gather information. And I think that it's going to be the internet is how people are going to have to get the information and research, and they have to be careful of those people that are promoters on the internet. Do they have expertise in this space? Do they really have a track record in this junior exploration space? That's going to be important.
Absolutely. And as far as kind of, I mean, you said something earlier, I can't remember the exact number. I think it was 50 billion. How much money have you collectively over your career invested into the mining space?
Oh, it's traded, invested. It's over $50 billion.
That's amazing.
In the past 30 years.
You might know what you're doing, Frank. You might.
And you still, like, you think you know what you're doing.
Yeah.
I didn't know that the millennials would come in like the 90s when people discovered, baby boomers discovered mutual funds. All of a sudden, millennials discovered micro cap stocks and ETFs. So yeah, it's how fast can you capture that information and become aware of it. But I do think that when you look at the Robinhood model, they had 3 million customers in a month.
Oh, was it in a month? Wow.
Yeah, we had 25,000 buy into Jets over two and a half months. Buffett came negative on the industry, and then the industry jumped 50%. So when they say millennials are stupid, they don't know what they're doing, I disagree because I see the data that they made a lot of money in that short period of time speculating. Well, and you need them because what happens, Anna, is that as you get these minerals coming in, then institutions come in. And it's the price discovery mechanism. So if there's not that liquidity for them, then the institutions aren't going to come in. And this really hurts junior mining. So you have to have a way. And what's interesting to me is when we look at a site like Acorn is another one, but Robinhood is much higher profile. Robinhood was one of the first to give you Bitcoin, Ethereum. They also gave you, besides the fractional shares, they have in their toolbar gold as an asset class. Schwab doesn't have this. TD Waterhouse doesn't have this. So you see the millennials that are really interested in this space.
Well, I was just laughing in my head as you were explaining that, and I've never thought about it before, but investing in the small cap space, especially millennials are experts at looking at their phones every 30 seconds. I mean, it's like we have a bunch of traders that are finally born in this generation because looking at your phone all the time, is part of investing in the small cap space, especially as well as
like the tech boom in the 90s.
Yeah,
and it's very similar, but they're more investor interest. And Jets, by the way, this is interesting about demographics. is that a lot of the millennials, rather than having lots of toys, they like to travel and have experiences. They're all about the experiencing economy. So they knew where all the best airlines were and the cheapest flights and when to book them, where the hotels were. Well, now we've gone through this crisis. And if you go back in March, at the low in April, sorry, it was less than 90,000 people flew. Well, today it's gone to 1 million. And the airlines have adapted, and all of a sudden they're flying, even United, et cetera, from small destinations in the northern states to Sunbelt area for tourism, for leisure, because the business person is using Zoom. And a lot of millennials knew about the airlines industry. So they became the early speculators in the airlines.
Wow. Okay, I want to make sure that we touch on, the main reason that we're here is mining in Canada. I would just love to get your general insights about the sector, within Canada. Obviously, you're a Canadian as well, and you're down in Texas. I love Texas, by the way, but you are a Canadian at the roots. Tell us your thoughts on the Canadian mining sector.
Well, it's still the most robust and it's very entrepreneurial. Which is really important. When you travel, say, through Africa, and I've done this all over Africa and into the bushes, you meet Canadians. You don't meet Americans. You'll meet them with the UN, you meet them with military, whatever they are, but you're not going to meet them hardcore exploring the ground, building facilities. French Canadians are building in the Congo 20 years ago cobalt plants. It's really interesting to see that. So it's in our DNA, I think. And we teach geology at a very young age in public school system. And I think that's a big part, is how important education is, that kids start to, yes, important for the environment, but you need mining and you need to have exploration and innovation and discovery. And it is higher risk. So being more educational as a thought process at early education levels is critical. And so the same thing when it comes to formation of capital, Toronto still is 60% of all the formation for mining. And why is that? Well, you get clusters around the world. If we talk about biotechnology, 50% of biotechnology is Boston and San Diego.
Really?
50% of software is Seattle and San Francisco. We get these pockets. So when we look at financing of cargo ships around the world, it's Singapore. It's the Mecca capital, just like Toronto is for mining. And so in Toronto, there's many buy side and sell side analysts, CFAs, engineers, geologists, many geologists with CFA designations. So you have this clustering, which is so critical for Canadians taking the adventure. Money comes in from the US, it forms in a Canadian corporation, it helps the capital. I guess Canadian investors speculate with that. And all of a sudden, the geologists, the engineers are in Latin America, they're in Africa. That dynamic is very important. The second other nation, when you travel around the world, is Australia in exploration. So you would meet Australians in Africa, you'd meet them in Latin America. So I think that sort of culture of exploration is deep in the DNA of both Canadians and Australians.
Well, I think the mining sector definitely, as you pointed out, is the backbone of the reason Canada has, such strong financial capital markets. It really was, it's where we have expertise. And I know that there's lots of countries in the world and lots of investors that will turn to us. I mean, PDAC is world renowned as far as a location, a central location for people to meet once a year from all around the globe and invest in the mining sector. The one other thing I wanted to touch on with you, while I have you, because how can I have this discussion with you and not ask this question? What do you think is going to happen with gold? We're obviously seeing a bit of a mining sector. We're seeing things moving. What do you think is going to happen?
Anna, look up. We talked about it earlier, the modern monetary theory and how it's morphed and taken over a lot of fiscal policies. The G20 finance ministers quite often last longer than their leaders, the political leaders, and the central bankers. So there's a cartel, and that cartel at the beginning of 2000 was all about global trade. And then after 2008-9, it became synchronization of taxation and regulation. And now it's about fighting World War III, COVID-19. It's the invisible war. And they're throwing every financial asset tool they can to fight this invisible war. And the knee-jerk reactions are huge I believe, in monetary policies. But be that as it may, what will protect you is having exposure to gold. And the 10% golden rule is just prudent and wise. The largest hedge fund in the world, Ray Dalio's Bridgewater, is always advocated an exposure like 10% in gold. And I think that that's what's really important for investors, and having 10% in quality gold stocks will do you well. They'll be more volatile, but overall, they'll do well because of this huge experiment. If we look at the federal balance sheet of the Federal Reserve in America, after 2008, 2009, it expanded by $3 trillion. Gold went from 800 to 1900, then it fell to 1,000. Now we have the next crisis. And I've said it's going to go to $10 trillion expansion. And what are we going to see? If you project that, gold goes to 4,000 over the next 3 years. It's just easy. And it's not a world war of weapons, of missiles, but the weapons of mass destruction is money printing.
Well, that is a really important takeaway, because there's not a country in the world that isn't, using their treasury right now to try and maintain stability within each ecosystem. And gold really plays a big role in that, right? It plays kind of a bit of a safety net, if you can use that.
It's the fourth most liquid asset in the world. And what you've seen now is the Federal Reserve 6 months ago started doing these lifelines of credit. And countries that didn't get it, all of a sudden they had to sell their gold, like Turkey, because they couldn't get US dollars. Canada, Mexico, Brazil, they've all tapped into getting US dollars for trade. So there's 15 major countries. So there's no doubt gold is you see central bankers have to sell their gold to be able to get dollars.
Absolutely. Yeah. It'll be interesting to see what happens, but I know most of us are curious what you think about gold in any given point in time. Listen, I can't thank you enough, Frank. I feel like we could talk forever, and there's so many insights. The one thing I'd like to leave on is just your advice. So if somebody wanted to invest in gold or in the mining sector, any advice for people as they're starting to look down that path?
Yeah, the whole thing on age. As you get older, you just have to dial down your risk tone. But I think that's a real simple rule. If you're 70 years old, you shouldn't have more than 30% in anything that's risky. And so now we're seeing all these 30-year-old millennials, and they're speculating with 70%. That's understandable. I think that's a very important part. The 10% golden rule, having 10% exposure, rebalance them once a year. It's just wise. There's lots of data to support that sort of thought process. If you're more sophisticated, you really love the industry, then you can go up to 25%. But remember the three price levels: there's wholesale, retail, and fairy tale.
I like that. I'm going to remember that one. Frank, thank you again for your time. You will be joining us, whether you know this or not. Your assistant does. You'll be joining us for our live event on November 24th, where we'll have more of this dialogue. But I really wanted the chance to chat with you just one-on-one and get some of your insights. So thank you again for your time today.
Thank you, and happy investing.
Thank you.